Alan, great to have you back. Good morning.
Morning.
Let's talk some core. This morning's number, annual rate 6.3, which would be above the year on year. Is this getting out of control? And does the Fed have tools to get it back in control?
Well, depends what you mean by out of control. I mean, the Fed wants it to be lower right now, but they don't have any tools that will do that right now. There is reason. One of the reasons is tightening up on monetary policy, but there are others to think it will go down, but not imminently. I mean, I was hoping it would get a downtick today in the CPI. We didn't. We did get a downtick, remember, in the PCE. So it looked like there was some hope maybe we were hitting the peak. But obviously today we did not. I mean, we made a new peak by a tiny fraction. I think one of the notable things about this is the tremendous gap. You mentioned the word core, between headline and core inflation. This has happened before, but not for a long time. I was looking at the numbers. Let's see, the headline CPI, 8.6, core 6.0. That's a big difference, quite a big difference.
You mentioned PCE, and we've been talking about the difference in the construction there. Maybe medical costs have can act as a bit of a salve, but it's unlikely, right, that would, I don't know, at the margin, would that mean much to the committee, given that they've already said they want to see clear and convincing?
I think it would mean a lot to the committee. I mean, I didn't know who you were going to ask. To the public, it's the CPI. They never heard of the PCE. But the committee believes the PCE is a better measure of inflation. They've staked their inflation target on the PCE, not the CPI. So, yeah, to the committee, it will mean a lot when that thing starts turning down. And as I said, in the last month, there was one little downtick, but the committee's not going to get hyper excited about that. It wants to see it go down, several months in a row.
Alan, what are the implications in terms of policy of the widespread that you point out between headline and core inflation measures right now? I mean, on one hand, one would think in the past, the Fed looks to the core to see the underlying trend, and perhaps food and energy that's inflating the headline is more of a restraint on growth than perhaps feeding through to future inflation. But it seems right now, I mean, the Fed just wants all these numbers lower and is not going to necessarily give much in the way of a concession to the fact that it's, better at the core level.
No, it's important that it's better at the core level, but as you were just suggesting, there is a feed-through. There's a political feed-through and a public relations feed-through, but also an economic feed-through from the headline aspects, energy and food, to core, if it keeps up. If it's a one-month blip, that's one thing. But if it keeps up, and it is keeping up, energy is embodied in almost everything we can imagine buying. Anything that goes in a truck, for example. Agricultural prices get into a number of other prices outside the agricultural sector. So, I mean, we've understood this for a long time, that there's a kind of a bleed-through, muted, not one for one, but a bleed-through of the food and energy components into core. And the longer those keep going up, the worse that bleed-through gets.